Hello there, Mavericks. It is Rob Reinhold again. I'm covering for Anka today, so you get to hear me on back-to-back days. In this session, we're going to talk about the news. We're going to talk about what's going on. We got a little bit of news out of New Zealand, and we're going to take a look and see, did the market get any better than it looked yesterday? And it looks a little better, but not much.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Right, let's start off with the news of the day. I already mentioned that the RBNZ had some big news last night, and they cut rates as expected by 0.5%. However, in their statement, they came out and said that the economy in New Zealand is still growing below target. And they said that inflation was within their range, the economy is growing below target. That's kind of a signal that there's more rate cuts to come, which the market really wasn't anticipating. So the Kiwi dropped about 1% off of this news. And then today we got the Fed minutes. So 2 weeks after every Fed meeting, they released the minutes that pretty much show what was discussed during the meeting. And this one was kind of wild. Most meetings, the Fed is all pretty much in agreement. And apparently in this meeting, there was spirited debate, whatever that means, about a 0.25% cut or a 0.5% cut. And there were some very vocal people that only wanted to go a quarter. So it's showing that the Fed was less dovish than we thought. You know, when we got that 50 basis point cut, now we see how close it really was. It's showing that some of the Fed members don't want to cut as aggressively as others. So what happened was the dollar strengthened on that, but the stock market didn't seem to care because they hit new all-time highs in the Dow and S&P. Now, this is really what I wanted to focus on today because yesterday I said, and I pointed out that pretty much all the currencies were up or down 0.2%. And you can see that's pretty much what happened again over the last 24 hours. The outlier is the Kiwi and the dollar. Kiwi dollar was really the only good trade today. So if you weren't in Kiwi dollar, then there was just no good trading today. As you could see, if you were trading Euro Pound, Pound CAD, anything like that, it just wasn't a good movement of a day. And I said that yesterday. I said I was looking for trades. I said, guys, I don't like this. I'm just going to sit out. I'm going to do the same thing. We'll go in and analyze. If we can find a trade that looks good over the next 24 hours, we'll talk about it. If not, it might just be one of those times where it's better to sit out of Forex. Now, I wish we could just simply go and play in crypto, but the problem is crypto is looking terrible as well. So you can see here crypto down 1.6%, gold, oil taking a break as well. You know, we got the big kind of panic off of the tensions in the Middle East. Volatility starting to come back down, oil starting to come back down. So things are getting a little bit less tense. But it did not help the cryptos because you can see here the cryptos were all down 1 to 2% across the board. So at the moment, the only game really in town is equities. Equities are looking great. Everything else, Forex, crypto, not looking all that special here. Let's take a look at the charts. Very clear what we talked about. I said at this point, it's either going to be a base or a bull pullback. I said it doesn't really matter which one it was, whatever you categorize it. Once we break above 57.70, then it is off to the races, and you can see that's exactly what happened. There is nothing else to say about this. This is as clear as a bullish breakout to new all-time highs as there could be. I've been, over the last 2 months, beating on my bearish traders to stop being bearish and to look at the charts. And I really think I got them all aboard now. And that's a good sign because this market is breaking out, looking to go higher. Let's talk about the next 24 hours in the news cycle. We really only have one thing, and this is going to be CPI. Now, personally, I do not think this is going to be that big of a report. Over the last 2 years, it's literally all we've talked about is CPI, CPI, CPI. It's come down. All the numbers have come down. Everything looks great. So let's say that the numbers come out as expected. The market is going to kind of cheer that on. Hey, good job. Let's say it comes out a little hotter than expected. Well, look, we've already taken back one of the rate cuts that was planned this year. Remember, we were at 5 rate cuts. Now we're down to 4, 0.25% at the next meeting in November and 0.25% the next one in December. So we've already taken those back. So let's say this number is hotter than expected. Yeah, we've already taken those off the table. So I don't think there's going to be much change whatsoever. Yes, there's going to be a move. Is it going to be a big 1% move like I like to trade? Probably not. So you can see there's just nothing on the calendar until Friday's employment report from Canada. I think that's probably the best news report left on the week. Let's go and look at some of the currency baskets. Let's try to identify where there is movement and we'll focus there. All right, I'm going to move through all of these fairly quickly. And again, we're just looking for what's moving. What's moving? So here is the yen. I'm on a 4-hour chart. And it's like, oh, is the yen moving? No. You can see it's going down a little bit, but there's no velocity to this. There's no velocity to this move whatsoever. We want these kind of moves, these kind of moves. There's nothing telling us that that move is around the corner. Let's look at dollar. Dollar is moving. So the dollar is absolutely making a move. So long dollar is definitely a possibility. Is the Swiss franc doing anything? Well, you can see, not really. Not really. When you take a look at the Swiss franc, it is going higher. You know, you could say, okay, this is going higher. We didn't make a new swing high there, but there's no velocity here. Let's look at the euro. Euro is creeping higher. So look, if that's the kind of trade you want, where it creeps higher, where it literally goes up 0.2% every day, then knock yourself out. You could be long euro. Same with the pound. I mean, this thing is just creeping higher. It's not in any hurry to go anywhere. So you can make these trades. They're just going to be very, very slow and not really have a lot of profit on them. Here's CAD. CAD is completely sideways. So for the moment here, totally uninterested in CAD. Aussie, look at these candles. These aren't tradable candles. Those are absolute garbage candles. Yes, it's creeping higher, but at a pace so slow. And then look at these wicks. You know, it takes off and then it comes back down, plummets, recovers. No thanks. And then we have Kiwi, and you can see Kiwi was moving. We've got about 3 candles here. So the last 12 hours, it's basing here. How long is it going to base? Nobody knows. But the next move is likely lower on the Kiwi. So when we look at our velocity scoreboard, you can see that these are +2, but they're like the lamest +2 you could ever get. So like I said, you could trade them. They're going to be very slow. The only things within the momentum right now is the dollar to the upside. Kiwi is taking a little pause at the bottom, but likely continues lower. And we've got yen. Again, this is not a great -2, but this is really our only choice here. So I'm going to take a look at Kiwi dollar and dollar yen. So let's first pair up Kiwi against yen and see, okay, which one is actually weaker. And you can see here over the last 20 hours, it's been about the same. The Kiwi's actually been a tiny, tiny bit stronger over the last 20 hours than the yen. So dollar yen is probably the right pick here. So let's take a look at where we are on dollar yen. You can see we are hitting up against some resistance area, but we had this pullback. And we've come back up. We're hitting against this resistance area. Look, we already hit it here. We pull back a 50% retracement. If we're looking at Fibonacci here. So we've got a 50% retracement. It should break through at this point following Fibonacci. Now look, it doesn't have to. Who knows what's going to happen, but this thing looks like it wants to go. So let's talk about where the next level is. If we take a look at where is our next level on dollar yen, I think we're all the way up at 152. Let's see where that is. Yeah, 152. So that is 280 pips at this point. Of course, it's not going to get there Today, there's not a lot of velocity, so don't expect there to be a fast move because there's just not a lot of velocity here at the moment. But could we make it up to 150? I don't see any reason why not. 150 and a half, somewhere up in here, I think is a reasonable place with 3 days left on this week. So for me, dollar yen, the big question is where is the perfect entry? And we don't really know where the perfect entry is because the perfect entry was off of this pullback back here, somewhere in this area. So we're not quite there at, 148.20. We're up here at 149.20. I think if you want to be very patient, then I think a buy on a breakout of this high over here, which is 149.38. I think that would be a good place. You can see we are getting a little bit of a pullback here. It's not much, but a little bit of a pullback. If this thing goes a little deeper, maybe down to this 149 area, and then I can get some green candles off of that, that could be a good entry. But for me, when I identify a trade I want on the daily chart and on the 4-hour chart, the timing, I take it in consideration. And I do make sure that I am not just firing trades out there without any thought. But this is where I say sometimes it's more important to get in the trade than to get the perfect price. Because sometimes these trades run away from you and you never get in because you're waiting for that perfect price. I always say this is where pyramiding comes in great. Take a half a position now. And then if it has a deeper pullback, you can take your other half later. Or if it does break out of that 149.38, that's where you take your other half. And so you have a nice average cost and you don't feel like you've missed out on it. So dollar yen is really the only trade I am interested in at this moment. Once Kiwi starts to head lower again after this base, it'll go on my radar, but dollar yen here. We do have to admit we are not in a great trading environment. Remember, trade the market in front of you. The market in front of us is not a great trading environment. So this is where, as a young trader, I would churn my account up, clicking buttons because I wanted it to be a good trade. I wanted to be active. Now, as I've been doing this for so long, I'm just totally, I don't even want to make a trade here. And if I did make a trade, it would be dollar yen. It's a mediocre trade. It's a moderate trade. It's not a great trade. That's just where we are in this market. So either be very, very selective with the trades you take and try to take less trades, not more. And then just be patient. Everything is cyclical in the market. The energy will come back. When it comes back, we'll have all of our account, all of our money. We didn't chop it all up with little losses just trying to be active. And then when the big moves come, we'll jump on them. Take care, everyone. Goodbye.